evening, ladies and gentlemen. You're watching India Tonight with me, Samita Karir, and my colleague Shivani Garath. And tonight on the show, we discuss a major shake-up that has taken place in the tech world. This is because Anthropic's latest AI automation tool that has triggered a massive market sell-off, and that's wiped out over $285 billion in value across software, financial services, and asset management stocks. Now, the release of new AI plugins, particularly those targeting legal and knowledge work tasks, they have sparked investors' fears of a rapid disruption to traditional business models, and that has sent shares in companies plunging sharply. In fact, adding to the concerns, Anthropic CEO Dario Amodei, he warned just 2 weeks ago that AI could replace most coding tasks within the next 6 to 12 months. He also stated that models may soon handle, quote-unquote, most, maybe all of what software engineers do end-to-end, potentially shifting human roles to oversight and editing. Remember, this comes in as the already battered IT jobs market is facing fresh uncertainty. Shivani, so more fears as far as AI is concerned.
Absolutely. So this is not a hype anymore. This disruption is actually happening in reality. And we have seen the impact of that on the software jobs across the world, and especially in the Silicon Valley. But meanwhile, more signs of AI-driven cost-cutting. Oracle is under scrutiny amid report it could slash up to 30,000 jobs to fund massive AI data center expansion as financing challenges mount. Amazon has rolled out significant job cuts, part of broader reductions totaling over 30,000 roles aimed at redirecting towards AI infrastructure and efficiency gains. As AI advances accelerate, the promise of innovation is colliding head-on with fears of widespread job displacement and market volatility. Now, we will continue to monitor these developments. Nifty IT, by the way, back home was the top sectoral loser in trade today, sliding nearly 6%. But before we go to our guest, Ishika is here with us right now to tell us what triggered such a sharp fall. Ishika, take it over.
After Anthropic announced this legal workflow model, US software stocks fell sharply, along with Infosys as well as Wipro ADRs that day. It also triggered a $285 billion wipe-off across software, FinServ, as well as asset management companies in the US on Tuesday. Now, investors had rushed to exit even marginally exposed names. And in terms of Indian IT also faced a major sell-off, with the Nifty IT opening sharply down, almost 6% down. And companies such as TCS and Infosys were down 7% today. Coforge and LTI Mindtree were down 6%. Emphasis and Persistent were down 5%. And other companies such as HCL Tech, Wipro, Tech Mahindra and Oracle were also down 4%. Now, this tool of Anthropic has had a major impact on Indian IT, because Indian IT companies sell process execution and AI remains the biggest threat against it. Now, this has caused a broad-based sell-off in the sector, and all 10 of its constituents were in red today. Now, this tool poses a medium-term structural pressure on labor-intensive service lines, especially in IT, and it might also trigger price reset demands from clients and cap on margin expansion targets as well. So this could lead to demand compression in IT, posing a great risk. Back to you.
Thanks very much, Ishika, for putting into context and putting into perspective the slip that we saw in IT stocks today. And ladies and gentlemen, what does this essentially mean for IT companies going forward? Was this an overreaction? Was this just part of a knee-jerk reaction by companies today in the stock market? To discuss that and more, we're now joined by Ray Wong. He's a principal analyst and founder, Constellation Research. He's joining us from California, and along with Mr. Wong, Mr. Sudeep Bandupadhyay, who's a market expert, is also joining us. Thank you very much, gentlemen, for taking the time out and speaking to us here on 80 Now. Ray, let me come to you first. Was this an overreaction by the markets today on the back of these tools by Anthropic, and do you see a long-term a threat to IT companies operating right here in India because of the kind of feedback that we've gotten from investors is the fact that the earnings have been rather great. So what is it that you make of what's really transpired on Wall Street on account of this AI flurry?
Yeah, it's a great question. We're seeing two things. One is a fear of AI taking away jobs and actually impacting revenues. And the second piece is a misunderstanding of how AI is going to be used going forward. There's a belief that AI is going to do the wholesale replacement. Those two things are structured in because people are taking money off the table for some of the stocks that have shown a lot of gains, especially in the tech sector and in that macro rotation. The challenge ultimately is this. Every company's facing three things. Margin compression. Every company feels like they're working 10 times harder just to stay still. And then the second thing is exponential scale. We're seeing scales we haven't seen before. If you're asking for a 30% discount, it's actually in the wrong scale. What's 1/10 the cost of a space launch in NASA? It's SpaceX. What's 1/10 the cost of a SpaceX launch? It's ISRO, the Indian Space Agency. That is a 10x, 100x, 1000x improvement that we're able to see with AI. And then the last piece, which is the most important part, is infinite possibilities with AI. The scaling, the order of operations and the precision and order of operations is really important. And we're starting to see that come to place. And that's why the Anthropic cloud announcement was so powerful. People could see how execution was going to be accelerated. And it's a question not about speed, it's the velocity that's happening with AI.
So my question to you, Mr. Wong, is do you look at it as a real disruptor at all? Or is it just like a momentary flash in the pan right now? Is it going to be disruptive enough over the next few months? And will we see it as a trend going forward?
This is a trend that's going to take about 6 months to materialize, but the services companies, the IT companies are also using those codes to actually be just as efficient. This is why we think that a 100-person company could take out a SaaS company today. We think a 1,000-person company could take out one of the IT majors, but it's going to take 3 to 5 years. It's not going to happen overnight, but you already have companies. We put out a list of AI-first companies and AI exponential companies that are out there already. There are 31 companies that are doing $200,000 in revenue per employee and using 20% digital labor. And so that's a trend that's going to continue forward. And so some companies may be able to keep the same headcount and do more. Other companies will actually have to do a reduction. And this is going to come down to their ability to execute in the new AI world and the customer's appetite to actually to do more with each one of those companies.
Right. This is going to be an interesting space to watch out for, Mr. Wong. But let me come to you, Mr. Bandyopadhyay, and thank you very much for patiently waiting for your turn. What is it that you make of what Mr. Wong is essentially stating about, IT companies will have to change or, there will be a challenge at least in the next 5 years and not in the near term. Would you agree with that, given the fact that IT companies based here in India, they have come up with their own AI models? There is agentic AI in place to sort of, bring about efficiencies. What is it that you make of what's really transpired?
Well, I think to the extent, to a certain extent, what Mr. Wong is saying is absolutely right. I think, AI is here to stay, and this will change the way Indian IT companies, Indian IT services companies have been operating. The sooner they adopt to the new paradigm, the better it is for them. And they are fully cognizant of that. Now, the job roles will change. The pattern of service delivery will change. The costs will change. And a whole lot of new way of doing business needs to evolve. I would say that many of the frontline Indian IT companies are now realizing that, have been realizing that for some time, and they have started to restructure the way they deliver services. They have started using multiple AI tools. Now, unfortunately, and we have to admit that Indian frontline IT companies have been little taken aback and were not in the forefront of the AI revolution. It's unfortunate, and they have missed the bus undoubtedly there, but they are trying to adopt, and they are trying to adopt very, very soon.
Absolutely. Simple question to you. Indian IT companies like TCS and Infosys, are they fast enough to pivot through, their entire delivery models to all of these changes that are happening? What is your outlook on that?
Well, I'm pretty confident that they will pivot. There will be some challenges in terms of people, in terms of margins, in terms of top line. So they will have a lot of challenges to navigate, but they will pivot. They have the capacity and the capability to pivot. Unfortunately, again, I will repeat, they don't have their own tools. So they will have to use third-party tools. So their margin will get squeezed. They will have to shift the way they have been delivering services, because AI is here to stay. And whether it's a 5-month or 1 year or 2 year, we can keep debating. But the fact is, AI will change the way jobs are performed and the services are delivered. The sooner they adopt, the better it is. You would have seen that they have started disclosing their AI revenue separately. And it's very, very important. So they understand the way things are going to move. Unfortunate that they haven't been able to be at the forefront of this change.
Absolutely, Mr. Bandyopadhyay, but it's good to see that they are finally looking at catching up with the companies in the West. But let me ask you one more question on market dynamics, and then we'll come to you, Mr. Wong. Mr. Bandyopadhyay, what is the kind of correction that you see further coming in the IT space, in the Indian markets, given the kind of valuations that we've seen with respect to the IT stocks and the fact that they have been a little bloated is the sense that we've gotten. So is this correction it, or is there more to come?
Well, unfortunately, I think there is more to come. Look, as I was mentioning earlier, their margins will be under pressure. Their service delivery models will come under pressure, and they have to do a whole lot of restructuring. The sooner they do, the better it is. And all these will lead to pressure on performance, which will get reflected one way or the other in the valuation and the price of the stocks in the market. So we have to be prepared for some more correction. Whether it will happen tomorrow morning or over a period of time is a matter of debate, but correction will happen. The valuations will become much more aligned to their performance. I also must say that these companies will continue to deliver 4-5% dividend yield. They continue to do buybacks. So the shareholders may not be losing, but yes, there will be value correction from current level as well. The only companies which will be able to maintain their edge are the companies which are focused on specific verticals. I will give you an example, travel and tourism. This is one segment which is booming worldwide. Now, there are certain smaller IT companies who are servicing exclusively or predominantly to travel and tourism. Now, they have been adopting, they have been navigating the changes in the sector, and they have been performing very well as well. So these companies will perform well. I'll give you one more example and leave it, the automobile segment. Now, there is a massive transition happening world over from ICE to EV. There are multiple IT companies in India as well who are at the forefront of this transition by providing technological services. Now, these companies will continue to do well and perform and attract significantly higher valuation. And some of them have gone ahead and acquired AI capabilities as well. So you have to focus on these niche pockets in technology sector to really do well as an investor. General and multi-product, multi-geography, large IT conglomerates will have to navigate this change in a painful manner.
Absolutely. Cast a wider net, look at a multi-pronged approach going forward, and look at, as I mentioned, cast a wider net is essentially what Mr. Bandyopadhyay is saying. But over to you, Mr. Wong. Which software categories are the most susceptible being completely replaced by AI agents? If you can help us understand that.
Yeah, no, I think Mr. Bandyopadhyay is correctly, and I would actually say, to add to this, the categories that I think that are at risk are those that are companies that don't have the system of record. This is a game about data going forward, and the ability to actually take that data, apply it to a process, and get it to an outcome. So companies that have the system of record will probably do very well because they have the data sets that are needed, and people are building on top of that. They need to build agentic capabilities, the ability to actually build the agentic AI processes and get to those outcomes. But we're going to see a shift in terms of how big of a company is required to be able to service. Now, it's easy to get from product-led growth to sales-led growth. You can get to 100 million very easily with few people, but as soon as you get into the enterprise, we ultimately have to buy from other people, which means we need customer service, we need experiences, we need sales team, we need marketing, and that go-to-market team has to be built. And so you're going to see an advancement up until about 100 million to about 1 billion, But after that, you need enterprise capabilities because we are still buying from humans with each other. And so that's really kind of the shift that we're seeing. And the traditional pyramid that we've seen, that goes away, right? That pyramid becomes a diamond because of AI and automation. And what we end up seeing is, one person paired up with three great developers, someone with a senior experience, a lot of process understanding, domain knowledge, paired up with 3 or 4 developers, freshers out of school can pretty much do this very quickly. And so that's the shift in the dynamic for staffing. And that applies both to software as well as services.
Right, Mr. Wong, also help us understand, is the AI market in a bubble? Is the sector in a bubble? Because these are also the kind of conversations that have been happening for a very long period of time. This is something that we saw with NVIDIA and now with Anthropic. So is the sector in a bubble?
Well, it depends where you look at it. If you're looking at AI for chips, the answer is yes, that is pretty much played out. We know who the winners are. Until we see the next set of advancements, it's going to be hard to see, where we are in the valuations. If you look about AI in terms of the models are at about peak. We're going to see the valuations when both Anthropic and OpenAI go public. But if you talk about software and services, we're still early. A lot of these companies are being formed. And what I would say is they're not in a bubble, but they're being judged. Your comps are OpenAI, Palantir, and NVIDIA. And when you think about that, that's what everyone's competing against. And that's what investors are thinking about is how do we get to those same margins and that same level of performance? Digital labor is going to be the way going forward that gives you that ability to get the 10x, the 100x, and the 1000x of scaling that's going to happen with AI. Is it all going to go away overnight? No, the answer is that's not true. Are we a little bit overblown in this correction? A little bit. I think we've taken this a little bit far, but the reality is there are going to be winners and losers that we're going to see. Those are the ones who adopt AI into their business models, and we're starting to see a lot of companies are doing that. The question is how fast, how much, and what are customers expecting?
Mr. Bandyopadhyay, Indian IT historically has been trading or traded on, let's say the cost arbitrage, so to speak, of, the human labor. Now, if agentic AI or AI agents are completely, helping us achieve a zero-cost marginal labor, does that also put a big question mark on those, working in IT, the IT jobs, that are being generated? How does, the job situation look like? Because globally, across the world, also, we have seen companies reducing the workforce over the past couple of weeks on a regular basis.
Well, I think, as I mentioned in my earlier segment, that the Indian IT companies will have to restructure, will have to relook at the way they deliver services. And you're absolutely right. Some of these, menial jobs, which were dependent on cost arbitrage, will be difficult to use for generating revenue going forward. But look at the way Indian IT companies are working. Look at the leader, TCS. Now, TCS let go a lot of people in the recent past. I forget the exact numbers, but I think around 20,000-30,000 people. On the other hand, they're putting up billions of dollars for setting up data centers in collaboration with a large fund. Now, that will require, again, thousands of people to kind of support that data center, run that data center, which in turn will support, cloud computing and AI-related services. So the nature of the jobs will change to an extent. They have to restructure, they have to redefine roles, and they have to do this on a continuous basis for the foreseeable future. Yeah, it's happening globally as well. I think you talked about Amazon, how Amazon is not reducing people, but they're reallocating responsibilities and shifting people from one business to the other business. So, depends on how each company looks at it. Some companies may let people go. Some companies may redeploy people. Some companies may redefine roles. So multiple things will happen, but there is absolutely no doubt that the roles will change. The service delivery mechanism will change. It is pretty much like, when the computerization happened, 30, 40, 50 years back in different parts of the world. We were all scared. People were scared then. What will happen to jobs? But jobs did stay. The nature of the jobs changed. Yeah. Technology brought important things, improved life.
Mr. Wong, yes. Yes, yes. But what does it mean for someone who's been, a software programmer for years and years, is, looking at some other avenue, upskilling, reskilling? Is that the only solution in this SaaSpocalypse, as a new term that we are learning right now?
But what I can say is that those with deep experience, deep domain knowledge, deep industry experience, deep understanding of a process, those folks are going to be fine, because we're going to pair them up with folks that can code quicker. Sometimes they're going to be digital labor. Sometimes they're going to be younger workers. The challenge is really, what do we do with younger workers as we move them up, where they're going to get that level of experience? And I think it's the freshers and the early career folks that are going to have a little bit more challenge in terms of finding those jobs, so that they can learn the experience, learn the craft of building software. Maybe they don't have to learn the craft of building software, but understand exactly what the industry and expertise is. And so this is the shift. We may be eating our young in the software business as well as the services business, because we won't be able to train them the way we trained them in the past. But what we are going to do is allow people to quickly build companies and startups. You're going to see a flurry of startups that we've never seen before, that are built by 3 or 4 people. My son's friends dropped out of university, and basically they started a company and got to 17 million ARR. They added 3 more people and got to 40 million ARR this year. I mean, this is going to be something you're going to be hearing a lot, and it's going to be an amazing renaissance of startups that are going to happen. Back to Mr. Bandapati's point, I mean, we're going to see new types of jobs emerge, new software companies show up, because the cost of creating a startup is so low, given the fact that the codes are. So if you can dream it, you can build it. The question is, can you do the distribution? And this is where software companies, services firms are going to provide that distribution and that capability. As companies go from product-led growth to sales-led growth, they're going to need those avenues to get there.
Right. Ray, let me also ask Mr. Bandyopadhyay. Mr. Bandyopadhyay, since we're talking about the markets and what's really happening in the AI and IT space, what should be investors' strategy, especially as far as IT sector is concerned? Like I stated earlier, the earnings have been good, although there's been a bit of a valuation concern. But how should the investor really move on the IT space in the near term, both for mid caps and small caps?
Well, as I was mentioning earlier, look, there are niche IT companies which are catering to particular segments, and those segments are on a growth trajectory. Let's take travel and tourism. So focus on companies who are catering to travel and tourism business. See what they're doing in terms of their service delivery. And some of these companies have developed cutting-edge technologies using AI. So focus on that. Focus on IT companies who are helping the transition of ICE engine to EV and providing cutting-edge services. Focus on those companies. And again, some of these companies have built AI capabilities, acquired AI capabilities. So look at these kind of niche, mid-cap, small-cap IT companies in Indian market, and there are already companies who are performing well. And I can talk about RateGain Technologies, which is in the travel and tourism segment, Coforge, which is doing a fantastic job. And we can keep giving example, Tata Technologies in that EV, ICE to EV transition, Persistent Technologies, and there are a whole lot of companies. So focus on those niche businesses. Keep watching the space as far as large IT companies are concerned. Some of them are, kind of progressing pretty fast, and probably will be able to handle this AI-led challenge which have been posed. And some of them may not be able to handle it that well. So you need to watch this space carefully. As you rightly said, they have performed well in the last quarter, and I am confident that they will continue to deliver decent performance. Whether they will be able to, give superlative performance or not, I have my doubts. But decent performance they will continue to give in the foreseeable future, because they have a steady order book, they have a steady business which will continue in the foreseeable future. But they have to get future ready by using AI and by adopting to this new paradigm very, very soon.
Absolutely, Mr. Bandyopadhyay. What an interesting chat we have had today, Mr. Wong and Mr. Bandyopadhyay. I don't want to end this, but unfortunately, we are running out of time right now. Thank you so much for joining us for this conversation on what are the changes that are being brought about by agentic AI, and what is that is going to take shape in 2026. Yes. Yes, go on, Sumita.
Shibani, I just have one intervention. In fact, before we wrap up this chat, we have the AI Summit coming up on 18th to the 20th. So, Ray, let me ask you, are you going to be making it for the AI Summit? And will we get an opportunity to have these conversations with you in person?
Absolutely.
I'd love to. I'm going to be at Indiaspora, but I hope to be there. But it's not yet on my plans. I'm trying to figure out how to make it. So it's definitely a big AI Summit, and I wish everyone luck as well to the event.
Well, thank you so much for joining us again. Now, moving on, artificial intelligence taking center stage. Chairman and MD of Reliance, Mukesh Ambani, and Chairman and CEO of BlackRock, Larry Fink, weighed in on the debate while Mukesh